Good morning and welcome everyone to the Trading Talk Uncensored live Q&A session. My name is Danny and I will give you the webinar today. And we will open the webinar as we saw on the agenda with the previous questions that our team has prepared. And to answer those questions, I would like to use somewhere for my to jot down the notes, which I think this notepad will do the job. And then we can simply take the first question, which is, let's see how much money is needed to open a position, one lot with NASDAQ. Okay, great. We're going to take the question, click on the notepad, paste it down, and then we can quickly choose the NASDAQ chart. Just a quick guide through about the interface here. Nothing too crazy, just to understand what we're doing. This what we're using now is called the web trader. The web trader is something you can access just by logging in with your email and password. And we're using now the desktop version. But if you're using a phone or something like that, we also have it in the app, and it's called the AvaTrade trading app. But we'll be using the desktop version for today. And to display NASDAQ, this is by default. We get this Aussie Canadian, excellent. Sometimes it looks like this. You can fold it down and up by clicking on the two tiny arrows to the upper right. So we're going to do that to fold it down. Okay, and there are two ways we can display NASDAQ here. One is to just manually go to indices, and in indices find US Tech 100. But we're not going to do that because that's going to take us time. Instead, we're going to click on the two arrows, delete whatever is here, or I can click it twice, it doesn't matter, and just type NASDAQ, and we've got US understroke Tech 100, which is NASDAQ, of course. And to answer the question, which was how much money is needed to open a position, one lot with on NASDAQ. Okay, excellent. So first of all, we're gonna click on the sell or buy to enable the order entry. Let's try the buy. It doesn't really matter because I can I can change by clicking on the whatever I want. You see that whatever is selected is a little brighter blue. This one is a little darker blue, which is not selected, and the lighter blue is what's selected. So clicking here on sell, okay, and another nice, okay, we'll get to that. The important part here is to first to answer the question, and for that, what I'm gonna do is I'm gonna click here where it says lot. In here we've got the amount of units, but in here we've got the lot size, and the lot size for NASDAQ is 1 to 100, as we can see. Lot size is 100. Therefore, if I'll click on order entry, and in order entry, I will delete whatever is here, and I'll say, I'll type 1, so then we get 100 indices of NASDAQ. And so the question is, how much money is needed to open? Okay, well, one indice, so we're gonna write down a couple of things to help us understand how it's how this works. The price per indice, let's call it unit because it's universal. So the price per unit will be 21,238.50. And the amount of units we're taking in this case will be 100. So we're going to write down here number of units equals 100. Perfect. And then we've got a lovely equation here. So price per unit times number of units gives us the value. You don't need to remember that because we're using the web trader. And on the web trader, everything is calculated automatically for us. Okay, so we're still going to validate this because this is a webinar and we're trying to learn something. But using the if you're using the web trader, you don't really have to. Still, we're going to do it. Okay, in this case, we're going to take the value per indice and simply, just a second, and simply multiply, and then we get the similar number to the value that was already pre-calculated for us. So that's 2,123,850. That's the value. Excellent. Underneath there is something called leverage. So leverage, what is leverage doing really? Leverage is giving us the ability to acquire more units with the same balance. Basically, multiplies buying and selling. Excellent. So this gives me the ability as if my account would have had 20 times more buying or selling power. But this thing comes with a cost. What is the cost? I have to comply to a minimum percentage out of this value to open the position. Okay, we're going to go through that. We're going to go through that in a moment. But first, let's jot down the leverage. So we will have it organized, and the leverage is 1 to 20. And as we said, it multiplies buying and selling. So we can look at this 20 as if our account, instead of having 10,000 available to take a position with Nasdaq, we can look at it as if it was multiplied by 20. So we can easily take the opposite, which is the value divided by leverage, and instead of being multiplied by 20, we can just divide the value by the leverage, which gives us the margin impact, which is the necessary amount to open a position. Excellent. So if we'll take 2,123,850 and divide it by 20, and then we get the number displayed in here. Again, for using whoever is using the web trader, you don't need to do any of what I'm doing now, but it's quite a powerful tool to understand what happens here, so you can compare it with other instruments as well. And well, if we're going to look at the balance we've got, so the balance we've got in here is 10,000, right? Balance equals 10,000, and the so-called cost for this position is not really a cost. Again, this is a margin that I have to comply instead of the whole value. This is what what the leverage is giving me the ability to do. Okay, and how can we know that this is the number that I need to comply to? Because this is 5% out of that. Again, I'm just giving you some information. It's not mandatory to remember, but if we're going to click here on instrument details, and we're going to scroll down, under the leverage, which is, if I point in here, it explains, we see margin 5%. Okay, 5% from what? 5% from the total value of the position. So for one lot, 5% of that is this. Another nice way is to divide it by the multiplier. Yeah, just like within here, super simple, nothing to it. And of course, the final conclusion is that we are not able to take the position as it is. And to be frank, not even 10% of that as well. Maybe if we'll go 0.9, sorry, 0.09. Yeah, this one we can do. I'm not even going to start thinking if it's something I would recommend or not recommend. In this case, I'll be using 95% of my available margin to acquire this position, and this is something I need to consider. Okay, so we're going to take that those notes which we wrote down, we'll paste it underneath the question so we will know that this was the answer. And that is a big mess. Okay, let's see how we can okay, it takes a bit longer than I expected. Maybe if we'll do it like this. Oh, nice. Okay, now all we gotta do is just to make it a bit smaller, and Let's see if it will. Not really. I'm still not quite happy with that. Let's maybe do it like this. Again, as I said in the beginning, guys, feel free to watch the recording of this webinar. I just don't want to use all of our time for one question, so I'm kind of leaping forward with this. I don't think we should waste any more time designing the, how it's in the presentation. Okay, the next question is, can I make more profits if I have higher leverage? Well, since we've already got an instrument opened, we've got NASDAQ is opened, and I'm gonna just show you what leverage actually does. So instead of 0.09, let's make it, you know what? Let's leave it like this. Again, we're not in the discussion if it's good or not. We're just learning, so we're using it as an example. And in this case, what we're going to do is we're going to quickly click on execute when price hits to enable the pending buy or sell. We're also going to target specifically 22,000 instead of the price that it's at right now. From a very simple understanding, it might move there anyway. Okay, so we're going to place the line where we want. Thinking here will be a reasonable resistance, and here another one. Here we've got the middle line, then we've got another. This one, okay, another one in here. Yeah, you don't have to take those lines too seriously, guys. I'm just placing it visibly for me to see the trend and make some kind of basic judgment what I'm seeing. It's nothing too sophisticated was done here, just to help me get a clear picture. Okay, so at the moment it's 21,189. I believe that it can go another $8 up. So what we're gonna do is we're gonna make 21,000 flat as our 21. Just a second. Okay, I think this will make a bit more sense, right? It's a bit difficult to see. What if we'll switch to minutes real quick just to show you guys? And it's still very, very difficult to see, but it's all right. What we need to remember is, even though I wanted to show you, but still, there we are. You see? If we would click buy, it would launch our buy now. What execute when price hits does is it basically lets you automate your entry, and instead of buying or selling at the price market, you can place a pending order that will trigger your entry. Okay, this way we can get flat numbers and our calculations will not be disturbed by the market that is moving. Okay, and in this case, what we're going to do is we're going to take 21,200 as the entry, and we're going to subtract, instead of 100, which I wanted initially, let's make it 1,000. And in here, let's make it 1,000 less. Okay, and then since we've got a 0.09, which stands for 9 units, we get 9 units over $10,000 over $1,000, which leads us to 9,000. Okay, again, we're going to break it down to an equation to make it a little easier for us. And we're also going to take the question here, can I make more profits? Take the question, paste it up here. Underneath, we're going to write down the name of the instrument we're analyzing, which is NASDAQ. We're also going to write the number of units we're using, number of units, 9 0.09 lot size. In this case, our entry will be 21,200. We targeted the stake profit 22,200, which is exactly 1,000 higher than what we targeted as entry, and 21,200 will be our stop loss. In this case, we can potentially make 9,000 or lose 9,000. Again, we're not in the discussion of risk money management, if it's good or not, or we should do it or not do it. Okay, we're not there at all. We're just understanding the possibilities. And the question here is, if can I make more profits? Can I make more profits? Or we're missing here, I think, an if, right? Can I make more profits if I have? Yeah. Is this written in here? I copied. Can I make more profits? I think we're missing here an if. Okay, so in this case, can I make more profits? Well, the answer is not quite, and I'll explain to you also why. The reason is, as we've learned, maybe I shouldn't delete this, then I can show you what's happening here. We'll quickly replace this to 9 since we're using 9 units, and then the value in here will be 1,000. That's actually quite clever to have those two questions aligned one after each other. This gives us the ability to use previous data to also answer this question, which is quite comfortable. Okay. Now, without the leverage, just to understand, I would have needed $190,000 to open the position. We've learned that we can divide the value by the leverage to know the real amount necessary to open the position, which is 9,540. Okay? Which gives me the ability to acquire more units. Will this make me more profits? Not necessarily. If I go for a smaller position like this, okay, still I can't open the position because I practically don't have enough capital without the leverage. Leverage doesn't increase my profits or loss directly. It gives me the ability to acquire more units, which as a result I can make or lose more. But it doesn't directly, if I would have here a leverage of 50 and I would take the exact position and I use the same numbers in here, a higher leverage is not going to change my possible profit to be higher. Yeah, it just gives me the ability to acquire more units. That's what leverage does. Let's read together: an option to open a bigger position than your account balance by having your broker multiplying your investment. So this myth about making more or lose, it's just, we're not there. Okay, just giving us the ability. So maybe we'll take another instrument just to help emphasize what we're doing here. Let's take oil, and we're gonna do the same exercise now. We're gonna also maybe go for 0.1. Let's take profit, I think making it around, we'll see together in a moment. Yeah, so this is some kind of my center line, and here another one, this kind of in the middle. So we've got 60, I'd say roughly 64 is something I'd be happy with. Okay, maybe a little lower than the resistance. Okay, and stop loss can be vice versa. We're gonna bounce 60 as our entry, and we're gonna take the same ratio down there, so that will make it 56. And then with $4 away, and we've got 100 units. Similarly to the same thing we did with crude oil. Okay, in this case, the entry is going to be 60, and the take profit is going to be 64. 64, and stop loss is going to be 54, just like that. And that leads us to 400. Again, 400. Now I specifically choose oil because with oil, just showing it to you in a moment. Okay. Value is 6,000. Okay. Like that. And then we've got 60. Okay. Great. Then we get the value. And now we can see that with oil as an example, we're not really using the leverage in order to just, there we go. We're not using the leverage to be able to open the position, because even without the leverage, what could we do? We could open it. We have enough capital for that, right? Look at our balance, 10,000, and we need only 6. But thanks to the leverage, we only need 10% of that. This is a proof that even if I'll do here X on the leverage, I'm still going to get the exact same result with or without leverage. Okay, so doesn't have the direct impact that is displayed on the question, can I make more profits if I have higher leverage? Of course, since I have leverage, I can acquire more units. And as a result, for being able to acquire more units, I can interpretate to more profits, but not directly, as I showed you now, with NASDAQ, with oil, and maybe something else if we would have extra time. But that's the idea, giving you a buying and selling power like explained in here. So to answer the question, I'm going to write down leverage does not grant, let's begin with okay, higher or lower leverage does not grant higher or lower profits, just giving the ability to acquire more units with the same balance. To acquire. Okay, there we go. Yeah. The next question is, can I learn to trade from webinars and videos? Well, the answer is, of course, yes, but it depends how you practice. If I watch videos and webinars all day, but I never trade and I never do anything practical with the knowledge that I gain, so maybe I'm not going to be able to practically trade, maybe only in theory, right? So it doesn't really make a lot of difference in which way I absorb the information. But let's make a quick comparison. So learn to trade from videos. Let's make a quick comparison. Learn to trade from, senior account manager. Learn to trade from a course maybe, and learn to trade from copying a strategy. Okay, learn to trade. What we've got is videos, senior account manager that can dedicatedly teach you, learning from a course, learning from copying a strategy. And I think anyone has any other ideas that can help us, we can write down. So we can learn from videos, learn from an account manager, learning from a course, copying a strategy, and to learn to trade from books. Okay, this is something that nobody talks about, learning from books. When I started, I used to look at those most of the time, I think videos are great, and there are lots of useful content that you can find on YouTube, such as the webinars that we're giving. But at the end of the day, how to implement it in your own phrase, in your own trading style, which supposed to go with your lifestyle, right? If I learn a strategy that is complicated and requires me, I don't know, 2-3 years of trading experience and 2 hours, 3 hours a day, and a lot of capital, and I don't know what. So even though the strategy might be genius, I'm not even close to that level. So it doesn't really, the way that we consume knowledge, it doesn't really determine my success, right? So at the end of the day, the question here, can I learn? Of course, we can learn from anywhere. But the question is how we implement it. So, for instance, if I learn from my senior account manager, I know that the process will be in my own pace, and I can practice from time to time, learning more and more topics that I can use. If I just randomly, I watch videos and I randomly just consume knowledge without any practical way to put it in use, so again, it's a bit different, okay? Also, copying a strategy is also a nice idea, right? We can download an app called AvaSocial, and then we can link our account to another account, do copy trading or do following, right? There are lots and lots of many ways for you to consume knowledge, and to want to expand and to become better is the first step. The second step is getting the knowledge, and the third step, to my personal opinion, of course some people might disagree, is to practice. Because at the end of the day, the market is alive. As you can see, it's moving up and down, and my success and accuracy will be as the more scenarios that I will see with various instruments that I can expand. There are lots of ideas for you guys how to find what to trade and how to explore and how to expand your horizons. But at the end of the day, my experience will come from the scenarios that I grasp and the variety of patterns that I'm going to watch on the market. This is the technical side. The fundamental side, of course, is something that is maybe a bit more logical, right? There are decisions that are reoccurring, and there are decisions that not quite decisions, but there are fundamentals change that we cannot anticipate. Like maybe we could anticipate. I wanted to give what happened with Trump with the tariffs. I wanted to give it as an example, but some may say we knew that it will happen, and some may say we didn't know. So I don't wanna go there. Okay, so at the moment we can see that the answer for this question is very wide. There are different ways for you to learn. Just pick what makes more sense, and you can keep up with. Yeah. Okay. Great. So, and one last thing, what I wanted to say about books. The reason that I liked books so much is because with books, you can have the book open by your side, you can have the chart open from the other end, and you can do it while reading the book. Might be a bit primitive, but yeah. Last question, what is the recommended amount to work with what is the recommended amount to work with trying a new strategy? Okay, well, let's look again at the chart this time. So we saw Nasdaq, we saw oil, and now let's click on commodities. Let's click on metals, and you know what? Let's diverse. And let's go with I think sugar might look pretty interesting. Very, very nice. Switching the days. Excellent. And we'll use it to answer the question. First, we'll take the question. What is the recommended amount, right? Okay, so we saw NASDAQ and we saw crude oil, and were quite familiar with what's happening there. So NASDAQ was sitting at 21,000. Crude oil was 60.3. And soybean is now how much? Let's see, soybean is 1,058.25. Excellent. Excellent. Now, what we're going to do is very, very simple. We're going to compare the margin impact that could be in a strategy to show you guys. Maybe we'll pick a fourth to explain it a bit better. So we've got soybean, we got NASDAQ, we're gonna have oil here also, and maybe gold. Okay. Now, soybean, the leverage is 1 to 10, which makes 1 to 10. NASDAQ is 1 to 20. And crude oil is also 1 to 10, which means 1 unit equals 10% of that, as we've learned, 105.8. 1 unit of NASDAQ, we've learned that we're going to divide the value by 20, so that's 1,100. We can easily confirm by clicking on NASDAQ, clicking on buy, and setting the lot size 0.01, and we can immediately see 1,058. And crude oil, we saw 1 to 10, great. Gold is also 1 to 20, like NASDAQ. So we're going to write the value 3,297. That is gold. And as we know, 3,297 divided by 20, that is 900. Oh, it's right. It's written here. 989. Okay, 45. That's for 1 unit. So assuming, okay, so unfortunately the bare minimum for oil, because oil, the lot size is 1 to 1,000, will be 10 units. So we can keep it like this, and the bare minimum for me to open a position with oil is this much. Let me just quickly show you and also explain to you the logic behind it. As you can see, similarly to what we did with NASDAQ, when we click on instrument details, we get access to the lot size. The lot size is 1,000 for oil, which means that if I'm clicking here on order entry and I'll click here on the lot size, the market is 1. We can see that now it's not 100 like NASDAQ or gold or soybean, it's 1,000. So reducing this 1 to 0.1, which means 10%, will be 10% of that 1,000. And reducing this 0.1 to 0.01 brings us to 1%. 1% of what? 1% of that 1,000, which brings us to 10. And because we've got 10 and the leverage is 10, the value of the price per unit will equal to the margin impact, because the same as the leverage. Yeah, that's the same number of units as the leverage. So dividing it by 10, dividing the value by 10 brings us to the exact point. Excellent. Now, The question is not asking about the necessary amount to open one position, to open one position, but it refers to a strategy. And in a strategy, I can assume that multiple instruments and diversified positions will be created. So I'm going to take the 105. Again, this is the bare minimum. Of course, it could be multiplied by the number of units. Yeah. So we've got 105. We've got something here doesn't make sense. Let's again look at soybean. Okay. $158. Oh, okay. That's the 158 from NASDAQ, and we've got 158, 1058 from soybean. So that's this came down to the same number almost. Well, that's nice. Times number of units. Then we've got 60.3. Okay, and number of units. Lastly, 3,297. So we're going to take those numbers, add them all up, and with our lovely calculator in here, okay, there's a question from Sean. Why did you write number of units? Okay, Sean, so the reason that I wrote number of units is because what I'm demonstrating now is assuming we're only taking the bare minimum of each instrument we saw, which is obviously, let's also do the same thing with NASDAQ, with gold, and with gold it's 989. So instead of the current value, we're going to take 989, like that. Okay, great. Great, plus 989, and that is so far. Again, I just want to explain what that number is, also for Sean. Okay, Sean, I want you to understand that the number of units I wrote here is the possibility that I will want to increase each of those positions, each. Okay, I'm not necessarily going to go with 0.01 with all of the positions. In this case, this number is based on 0.01. In other words, if for instance, I would want to extend one of these positions to be 0.2, this value here will have to be multiplied. Okay, so that's multiplied by the number of units, gives us the necessary amount. Okay, that is quite important to remember. It's quite important to remember because I always have to make sure that my margin level is in a proper level. And when I don't have the ability to comply to the margin, just a second, guys. And when I don't have the ability to comply to the necessary margin, the platform will close my first position. Typically 50% margin level on average, but it could be more or less depending on the leverage that you've got. You gotta make sure that your margin level is healthy at all time. This is why it's important to make comparison before opening a position, just like I showed you with NASDAQ in the beginning, which if I would go for 0.01, will consume 95% of my account. Yeah, let's look together, 0.9. Oh, okay, we are still with soybean, but yeah. Okay, And now we see, okay, so 9,500. And if we do this, even another position with gold is not a possibility because we don't have the margin, right? So for every instrument that I would want to increase as part of my strategy, I will want to ensure that I have enough margin to cover that. This is why the question here about what is the recommended amount to work with, the recommended amount to work with, trying a new strategy, it doesn't really matter if I'm trying a new strategy or not. What important is that I always ensure opening a position, I want to make sure that I have enough margin not only to open this specific position, but also spare margin that will be my safety net and help me sustain the position. Obviously, if I have additional margin, I can even open another position, as I showed in here. So the total cost, again, I don't want to use cost, but there's really no other way to describe this, but the necessary margin I need to open all this position with 0.01 is a total of 2,213. If I will increase, I will want to have more. I think this is quite sufficient to answer the question. We're going to take, I really highly doubt that we'll be able to fit all of this into the presentation, but let's have some faith. Well, not like this, we won't, but what if we're getting closer, still not exactly there. I really want to keep this part because it helps understand the comparison we've made. Maybe if we put it like this. I can't believe it. We actually made it, guys. Almost. We're missing, look what we're missing. Let's try it like this. Okay, again, you guys are welcome to watch the recording of this webinar and to understand the concept of what's written here. I really tried, but it just doesn't really let me do it. Okay, so the next part, as I have explained, is this slide in here. And what we're going to do is we're going to share with you some links to save you the trouble finding those things by yourself on the website. And I'm simply gonna put it in the chat. Let's see. Okay, so that's the first one. Okay, great. That's the, oh, I'm not sure that I'm pasting the right thing. Just a second. Okay, maybe now. Okay, I've got a little bit of delay in my screen. Let's try again. Maybe now. My screen is not even showing, I think. Maybe now. Okay, well, I hope that it works. It seems like it's moving. So I've pasted the first link in the chat to for education, for further education. This one is to log in and make a deposit. This one here is the faculty help center for more official questions about the account or the process. This one is for real account if you're still with the demo and you want to practice, as I've explained, get to the business. And lastly, we've got the academy, which is also accessible via the website. And I'm going to show it to you very easily. But before that, I would like to share with you the special promotion code, the Q&A benefit. for you guys to give to your senior account manager and receive one-on-one premium market review, which is, to my opinion, one of the most useful things, since it's purely practical. You look at the chart, you can ask whatever you want, just amazing. And one last thing before we say goodbye is to show you guys the academy and the tutorials without leaving the website. So this is a very nice way to get better understanding the concept. In here at the bottom left, as you can see, you've got the upper segment, which ends with additional platforms, and you got the bottom segment, which is our chat and the tutorials in the academy. So clicking on academy is going to take us to the academy, and obviously clicking on tutorials is going to launch the tutorials video window. And in this tutorial window, we can scroll down like this through the topics, and maybe if we specifically want to go with entry orders, we can click it, and right away we can play with, in a moment, with sound and with everything, and even translation in here. Super simple. We can expand it. This is directly from the website. I want you guys to understand how easy that is to have access to all this content, okay? Unfortunately, we're out of time for today. I really hope that it wasn't too fast for me answering those questions for you guys. I really tried my best to, to make it in a reasonable pace, but also wanted to give you the answers which will be comprehensive and understandable. So you're all welcome to join us with next week's webinar. And as I have explained, there are lots and lots of useful content in the website in our YouTube channel for you to use. A lot of various topics which I recommend you guys to check. All right, best of luck with trading. You're all welcome to join us, and I'll see you next time. Have a good day.